month for your first year. Yep, the same exact nationwide coverage as the leading carriers for $15 a month for an entire year. What are you waiting for? Call 1-888-FREEDOM or visit consumercellular.com and use code radio15.
See consumercellular.com/firstyear15 for promotional details.
Financial Focus with Leo Leiden. Weekday mornings 8 to 9 on WBNW, 1120 AM and 102.9 FM. The Money Matters Radio Network. This is WBNW 1120 AM, the Money Matters Radio Network. This is the Money Matters Radio Network, WBNW 1120 AM and W275CM FM. Concord, Boston, the Money Matters Radio Network.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutsky with your Financial Exchange Quick Tip of the Day. And today, we're talking about the top estate planning mistakes to avoid. Todd, a lot of people create their estate plan, but there are some that don't actually transfer assets into it. Can you explain why this is such a big mistake?
Sure. I'm going to try to explain it both from a revocable and an irrevocable planning standpoint. With the revocable, if you don't put assets in there, you end up leaving them owned perhaps jointly if you're married, and designated beneficiaries and the like. But if everything goes to the spouse when one dies, then you've completely avoided your estate plan. In other words, you've set your trust up, but you went around it by leaving everything to the spouse instead of going through it by funding the trust and cramming down the assets to shelter some from estate taxes on the first death so there's less taxed on the second death. And ultimately, on the second death, if you don't plan, there could be a probate problem because everything would go to probate if it's in their own name. The other big reason is with an irrevocable trust, of course, not funding it also can result in estate tax problems by the same way it did with the revocable trust. But in addition to not funding them with the irrevocable, you don't even begin the 5-year waiting period to get the assets protected from the nursing home. So there's a much bigger problem not funding an irrevocable trust versus not funding a revocable trust. So make sure you fund your trust if you do your planning.
Well, luckily, Todd Lutsky and the estate planning experts at Cushing & Dolan have written a brand new guide that details the estate planning blunders to avoid. You can request this brand new guide by simply calling 866-848-5699, 866-848-5699, or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated.
Building a solid financial strategy is a core element to enjoying your retirement years. That's why you need advice that you can count on. At the Armstrong Advisory Group, we understand the challenges of positioning your assets to help you maintain your wealth over time. Our goal is to offer advice that is both suitable and in your best interest. When you hire one of us, you hire all of us so you can be comfortable knowing that every advisor in our firm is dedicated to helping you create a realistic plan for your later years. Visit us today at armstrongadvisory.com and sign up for a free, no-obligation planning session. Click the Get Started button at the top right corner of the homepage, and you can select the day and time that works best for you. Go to armstrongadvisory.com and let us help you secure your financial future. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Are you looking to volunteer for an amazing nonprofit organization that helps our veterans? The DAV Department of Massachusetts Transportation Network needs volunteers right now. This network provides free transportation to and from any VA medical appointment for veterans of all eras. To become a volunteer driver, you do not need to be a veteran or a DAV member. You just need to have the willingness to help our veterans and have a valid driver's license. Sign up now at davma.org. That's davma.org.
The U.S. Virgin Islands is the perfect destination for your next vacation. Visit St. Croix, St. Thomas, or St. John and experience incredible weather, iconic history, pristine beaches, world-class cuisine, and a vibrant nightlife. Book now and you might just make it in time for the St. Croix Mango Melee on July 7th. The family-friendly event offers food demonstrations and tastings, cultural dance performances, and the ever-popular mango eating contest. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all 3 islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor that provides investment advisory services. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else, and do not guarantee profit. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Marc Fandetti. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. The DAV 5K Boston is presented by Veterans Development Corporation. This is the Financial Exchange with Chuck Zodda and Marc Fandetti.
Chuck, Mark, and Tucker with you here, and our top story today is yesterday, the Federal Reserve, they released their Economic Well-Being of U.S. Households report for 2023. They release this every year. And it tells us a little bit about what households are thinking about the state of their own finances, the state of the economy over the past year. And what's nice is that they've been doing this every year. The earliest data I could find was going back to 2013, but they've been doing this for 11 years now, which is nice because we have a track record that we can compare this against in order to understand how these things may be evolving over time. Because one of the things that I really dislike when it comes to studies is when they're like, hey, we just got this report that 82% of people think the sky is green. And you're like, well, how does that compare to prior years? Like, is that up, down, or neutral? Is this a problem, or is this something that people have always thought? So it's nice that we have a whole bunch of data to compare on this because it's, again, it gives some context, I think, that is important here. Now, as far as the sampling that they do on this, it looks like, just to give you a sense of this in terms of, who this actually, who completed this, there were 11,488 people that participated and completed this survey out of about 16,000 that they contacted. So that they actually got like 70% participation, which is pretty darn good, if you're asking me. And so you've got 11,400 plus people that are in here. And I want to really dig in on this because I think right now what people think about the economy is, for better or for worse, as important as what the economy is actually doing. I think it actually matters somewhat. So in this survey, and there's a piece from the New York Times that says, people are having a harder time this year. So 72% of respondents said that they are doing at least okay financially, which is down from 73% last year. The New York Times also mentions, hey, that's way down from the 78% in 2021. Mark, 2021 was a year where there was just like stimulus.
We were flush with stimulus payments. 72% is the same as it was in April 2020, by the way, the depths of the COVID recession. And before, or at the more or less same time that those payments were just starting to hit. So people feel the same about their their financial status, to be more specifically, those who responded in the affirmative to the statement, are you doing at least okay financially, is the same now than it was when unemployment was 14%?
Well, this is one of the things that I'm going to get at, is that overall there's relatively few data points that suggest this number changes meaningfully over time. So you go back to pre-pandemic, 2019, the end of 2019, in October of 19, really good economy, right? Inflation was low, unemployment was low, and you would say, okay, gee, like that must mean like 80, 90% of respondents say that, yes, we're doing at least okay. What was 75%?
Same as the year before?
Same as the year before. 2017 was 74%.
Same as 2020
2016 was 70%. What you get, if you go back to like 2013 and 2014, when you still had a very sluggish economy at that point coming out of the recession, you finally got down into the mid-60s in terms of the respondents that said, hey, things are okay or better. But where I'm going with this is that the vast majority of people, if you ask them how they're doing financially, they generally say, yeah, I'm okay or better. Like there's an ego component to this where I don't think a lot of people want to admit they are doing poorly. Or the other piece is, hey, do we focus way too much on all this stuff? And the overall message should be that most people are just fine. It's one of those two things. It's either our egos prevent us from saying things aren't good with our own situation, or for all of the gyrations the economy makes, most people figure out how to make it work, and they're, okay with it, even if they're not great. Because you would expect a survey like this to have more of a difference based on how the economy's actually doing, and it really doesn't.
I'm not sure the survey's useful, and that's a polite way of saying I don't think it's useful. I don't think, if you don't mind me editorializing, the Fed's job, and it's amusing, in the preamble to this 83-page document, the Fed lists its responsibilities. The first, they're in bullet points. They're not ordered, probably because they don't want to be perceived to be prioritizing them.
Sure.
The first is conduct the nation's monetary policy. How you doing on that front, guys? Not so hot. In that they haven't
been better.
Yeah, slightly better, but
no, I said it's been better.
It's been yeah, exactly. And then it goes on, promote the stability of the financial system. Okay, that was the reason for the Fed coming into existence. It was in response to a series of panics. And then you get down the list, and it gets more and more questionable. The last bullet is promote consumer protection through community development. Nowhere on this list do I see take the temperature of people's economic perceptions. I just don't understand why the Fed is doing something that plenty of private entities do. They're not succeeding in their primary mandate. Look, I'm cursing at the wind here, or cursing the wind, whatever the expression is.
Well, the Fed is a research institution. Like, yes, it conducts all this banking, but it's a huge research institution. And so, conducting surveys about what people are, thinking about the economy goes along with that. The question that I think is worth asking, and but
it's redundant. There's plenty of good data out there.
Well, here's the question that I think is worth asking right now is, why does it seem that the vast majority of data out there about people's perception of the economy does not necessarily reflect broad reality? And what I mean by this, there was a poll that I saw this morning, and again, it dovetails nicely into here. It was conducted by Harris, which is a polling firm. They surveyed a bunch of people from the U.S., and 49% of them believe that the S&P 500 is down this year. Now, not only is the S&P 500 up more than 12% this year, it was up 24% last year. So when we get basic facts like that wrong, it makes the opinion-based stuff even harder to figure out what's going on. Because, again, you would expect, like in 2022, when inflation was really freaking high, you'd be like, wow, a lot of people should be polling and be responding and saying, yes, like my personal financial situation is not good. And in fact, you were getting the same number that we're saying it was fine as 2017 when unemployment was low and inflation was low. Like, there's something fundamentally broken here in how we are assessing reality. Well, and that's kind of where I've started to land. Like, on some stuff where you say, look, the median person does this. And yes, I understand that when you look at medians, 50% of people are going to be worse and 50 better. So there's room for interpretation on that stuff. When it comes to, hey, is the stock market up this year? There's not room for interpretation on that. The stock market's up.
I think people have taken to rejecting officially produced economic statistics. They just don't believe them.
The stock market's not a statistic, though.
It is, well, they would put it in that category. So if you ask somebody about, Chuck, I know this sounds unbelievable, but I've talked to people, particularly those who watch Fox News, like I do. I'm an economic conservative. I want smaller government. Let me preface this so that we don't get a bunch of texts saying I'm a communist by saying I've never voted for a Democrat in my life. Okay, maybe that's a little too much information.
Sure.
But that sort of sets the context for where I'm about to go with this. I've never seen such misinformation propagated by a news entity about the state of the economy. Whether you like it or not, on average, the economy's doing really well. I don't credit the current administration for that.
No.
But there are a bunch of people who are so hostile toward it that they can't admit that unemployment is bumping around 50-year lows, that growth is above 3%, something that's been rarely achieved in the past 20 years, including by the last president. I don't credit the current administration for it, nor do I blame the last administration necessarily, though you could attribute some of their economic problems to COVID lockdowns. For the economic successes or failures. A lot of it is just part of the business cycle and the structural state of the economy. But there are people who just watch one news channel, frankly, and they're getting one, as a result, very filtered and in many ways inaccurate view of the economy. It doesn't surprise me at all. Well, I'm sorry to have to say that. I know it offends a lot of you.
No, look, I don't think that it's inherently unique to either side of the spectrum there. I think that if you look at,
that's fair too.
I think if you look at what gets propagated by MSNBC, it's just as distorted. It's not something that you're looking at and saying, oh, like they get it. No, like that's not how it is. But when we can't look at the S&P 500, which is not a government statistic, it's something that is.
Chuck, a number's a number. They don't trust any of them. They have been conditioned, and when I say they, I mean people who just watch one news channel. I'm sorry for picking on you and being so specific here, but you know who you are. You reject it all. You don't think unemployment's low. You think that number's cooked. You don't think inflation has come down. And I am as upset or more upset about that than you are, believe me. But Chuck, they reject anything quantitative that comes from an authority or seeming authority. That's where we are.
So I think the question is, how do we fix this? And I don't have the answer for that.
No, it's deeper than
I don't have the answer for that. And again, when you ask people, look, how are are you struggling with inflation? Like, yes, like there are things that are completely unique to individuals on that side of things. But what I struggle with is when half of people think that the stock market is down this year.
I'm not surprised at all, given what
I
my own experience.
Don't know how to reconcile that with what is actually going on.
There's no basis.
And that's
no basis for a discussion.
It's kind of tough for me to figure out what to do with there. Let's take a quick break. When we come back, why don't we talk a little bit about the Fed and the risks associated with the current policies that they are undertaking.
This is your home for the most comprehensive coverage of the economy and the trends on Wall Street. This is the Financial Exchange Radio Network.
A recent report from LawDepot.com says that only 3 out of every 10 adults in the U.S. have taken the time to create an estate plan. Don't be a member of that group. Hi, this is Mike Armstrong from the Armstrong Advisory Group. A sound estate plan can give you control over your assets and peace of mind as you enter your retirement years. Our new guide is called Leaving a Financial Legacy, and in it, we look at estate planning from a financial perspective. It's important to have a strategy that addresses your investment portfolio and all of your holdings, including real estate. We'll also focus on other issues issues, such as how to manage long-term care expenses that may affect you down the road. Get your guide today by calling 800-393-4001. That number again is 800-393-4001, or you can also request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Creating the right estate plan to help secure your future takes effort. There are plenty of mistakes that you can make, any one of which could have a dramatic and damaging effect on your financial strategy. Cushing & Dolan are experts in estate planning. Their brand new guide is called Detour Ahead, Estate Planning Blunders to Avoid. In it, you'll learn about these critical errors so that you can make the right decisions to always protect your assets. As an example, if you've created a trust more than 10 years ago and haven't updated it since, you're setting yourself up for problems. Cushing & Dolan's new guide will help you address issues like this. So call right now, 866-848-5699, and ask for your copy of our new free guide called Detour Ahead, Estate Planning Blunders to Avoid. That's 866-848-5699, or request it online from their website, LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
Are you looking to volunteer for an amazing nonprofit organization that helps our veterans? The DAV Department of Massachusetts Transportation Network needs volunteers right now. This network provides free transportation to and from any VA medical appointment for veterans of all eras. To become a volunteer driver, you do not need to be a veteran or a DAV member. You just need to have the willingness to help our veterans and have a valid driver's license. Sign up now at davma.org. That's davma.org.
There are crucial mistakes you can make during the estate planning process that may have a damaging effect on your financial strategy. Cushing & Dolan's new guide is called Detour Ahead, Estate Planning Blunders to Avoid. Get yours today and make the right decisions to protect your assets. Call 866-848-5699. That's 866-848-5699, or request it online at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. The Financial Exchange Show podcast drops every day on Apple, Spotify, and iHeartRadio. Hit that subscribe button and leave us a 5-star review. You're listening to the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you in part by the U.S. Virgin Islands Department of Tourism. The U.S. Virgin Islands is the perfect destination for your next vacation. Enjoy St. Croix, St. Thomas, or St. John, and enjoy pristine beaches, world-class dining, and fall naturally in rhythm with the heartbeat of the islands. There's no passport required or money to exchange. Go to visitusvi.com and book your trip today. That's visitusvi.com.
Piece today from Mohammed El Arian in Bloomberg talking about how there seems to be no one who wants to jump out of line at the Fed, talking about the uniformity in their policy signaling and how, Mark, did you know that this week we have 16 Fed speakers scheduled to speak? Or that's how many we had at the beginning of the week.
I did not know that, but I'm not surprised.
We've got 3 1/3 a day.
That's 16 too many.
I feel bad for the third of a Fed speaker that has to speak every day, but it's just something where I don't really know what we're doing here in terms of the frequency of communication. Like, why do we need the Fed giving 2 interviews on Bloomberg a day, 3 commencement addresses, 2 economic roundtables. Like
Larry Summers, the Harvard guy,
yeah,
who's a lightning rod. I love the guy, but he's a lightning rod. A couple weeks ago at a conference on this subject said the Fed needs to cut the cacophony.
They do. It's, they give us so much messaging to try. I was talking with, I forget who it was about this a couple weeks ago. And the case that the Fed will make is, well, by communicating better, we're able to get our message out to help, manage inflation expectations.
It's the name of the game, yeah.
Mark, what person says, oh, gee, Waller's speaking today, let me tune in and listen to them?
Other than short-term traders.
Other than market participants, and I'm not
Which
talking
is
about
important. There are inflation expectation theories based solely on market perceptions, so that's not unimportant. But
when we talk about inflation expectations,
they mean you and me, and
they're based on, hey, I passed the Gulf Station in Saugus and it was 350 instead of 342. Right. Inflation's getting worse, and we just don't need 10 to 20 Fed speakers a week.
Larry Summers made the point. He's like something to the effect of, when a company is executing a change in policy, you don't hear from every C-suite person.
No.
And all of it that would be very confusing. When the Supreme Court hands down a ruling, there are dissenting opinions, but you don't see the sausage making. That would be confusing and maybe divisive. The Fed seems to be, as Summers pointed out, the only very high profile, certainly very important in a national sense entity that feels the need to, in real time, share its thinking with everybody. And it's confusing, to me anyway.
So I guess, Mark, you understand monetary policy far better than I do. What would be the impact if the Fed said, look, we're not giving speeches anymore? And instead of this long Fed statement, I mean, you remember the days when the Fed statement on their rate decision was, we kept interest rates the same.
I remember the days when there were no Fed statements.
Right,
I'm sorry to say, yeah.
What would happen if, you just go to the Fed's keeping interest rates the same, inflation's still too high?
My guess is financial market participants who like to front run and game these things would squeal.
Yes.
But how would you evaluate, how would you answer that question empirically, as researchers like to say? How would you determine whether or not we were better off under such a regime? You would have to look at the volatility of different real economic variables,
sure,
things that affect you and me and everybody listening. All I can tell you is that the volatility of economic variables has not been tamer since the Fed started doing this.
And that's because you can't remove volatility. You can transform it, but it just shows up in different places. Like it doesn't go away. It might show up differently and express itself differently, but it doesn't you can't suppress it.
Yeah, so to answer your question, we did live in that world for a very long time. Press conferences are very new. 2012? Statements only from the, and I find it hard to find fault with Alan Greenspan, but he is the guy that started issuing statements explaining what they did with a brief explanation as to why. Before then, as you pointed out, you didn't get any information. You had to infer what the Fed did by looking at the interest rate banks charge one another on overnight loans, so-called Fed funds, and you had to infer what the Fed did as a consequence. So I'd love to try it, Chuck. I suspect, by the way, that we'll get back to that. This isn't the Fed. The American Republic is an ongoing experiment with an uncertain future. That's doubly or triply true of the Fed. We will get back to that. We will curtail the cacophony, as Larry Summers said.
I don't find myself agreeing with Larry Summers very often, but when I do, it's now. The other piece that Alluring makes, the other point that he makes, quote, as I've argued before, 2% may now be too low a target for a domestic economic approach that is no longer anchored by the Washington consensus of liberalization, deregulation, and fiscal discipline. When you talk about what we're seeing economically, it is very much heading towards more tariffs, more regulation, less fiscal discipline, regardless of who is in office. That's something that we need to reckon with as far as what it means for costs. Taking a quick break here, Wall Street Watch and Ask Todd are next.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network. Proper estate planning is crucial to you being able to enjoy your later years, and it may be the difference between retiring comfortably or living under incredible financial pressure. Creating an estate plan can be a difficult process if you aren't working with an expert who will make sure that your plan is secure. Cushing & Dolan can help. Call them today at 866-848-5699. Estate planning is their business, and they have a new guide out this month called Detour Ahead, Estate Planning Blunders to Avoid. Don't put your assets at risk and open yourself up to severe tax consequences. Even if you already have a plan, this guide may help you correct an issue that could come back to bite you in the years to come. Call right now, 866-848-5699, and get your free guide today. That's 866-848-5699. Or request it online from their website, LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
We are the Debt Destroyer Network. Any debt you have, credit card, tax, student loan debt, call now for free information that helps you destroy your debt. It's great advice. Plus, when you make this free call now, we have debt destroyer experts ready to help. They can show you how to destroy your debt and get your life back on track. Debt problems don't have to be overwhelming. You can live stress-free and debt-free. Credit cards, medical bills, IRS tax problems, even student loan debt. Learn about free programs offered by the credit card companies, hospitals, and even the government that can help slash your debt. Call the Debt Destroyer now for free information. Call now. 800-430-8804. 800-430-8804. 800-430-8804. Again, that's 800-430-8804.
The U.S. Virgin Islands is the perfect destination for your next vacation. Visit St. Croix, St. Thomas, or St. John and experience incredible weather, iconic history, pristine beaches, world-class cuisine, and a vibrant nightlife. Book now and you might just make it in time for the St. Croix Mango Melee on July 7th. The family-friendly event offers food demonstrations and tastings, cultural dance performances, and the ever-popular mango eating contest. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all three islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
A recent report from LawDepot.com says that only 3 out of every 10 adults in the U.S. have taken the time to create an estate plan. Don't be a member of that group. Hi, this is Mike Armstrong from the Armstrong Advisory Group. A sound estate plan can give you control over your assets and peace of mind as you enter your retirement years. Our new guide is called Leaving a Financial Legacy, and in it, we look at estate planning from a financial perspective. It's important to have a strategy that addresses your investment portfolio and all of your holdings, including real estate. We'll also focus on other issues, such as how to manage long-term care expenses that may affect you down the road. Get your guide today by calling 800-393-4001. That number again is 800-393-4001, or you can also request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Are you looking to volunteer for an amazing nonprofit organization that helps our veterans? The DAV Department of Massachusetts Transportation Network needs volunteers right now. This network provides free transportation to and from any VA medical appointment for veterans of all eras. To become a volunteer driver, you do not need to be a veteran or a DAV member. You just need to have the willingness to help our veterans and have a valid driver's license. Sign up now at davma.org. That's davma.org.
There are crucial mistakes you can make during the estate planning process that may have a damaging effect on your financial strategy. Cushing & Dolan's new guide is called Detour Ahead, Estate Planning Blunders to Avoid. Get yours today and make the right decisions to protect your assets. Call 866-848-5699. That's 866-848-5699. Or request it online at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch. A complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Well, markets are incredibly flat as investors await meeting minutes from the Fed due out this afternoon, in addition to the highly anticipated first quarter earnings report from NVIDIA after today's closing bell. Right now, Dow is up by 11 points, S&P 500 is flat, and the NASDAQ up by 9 points. Russell 2000 down by about 1/3%. 10-year Treasury yield up by 1 basis point, now at 4.46%. And crude oil down nearly 1.5%, trading at $77.57 a barrel. Target is the latest retailer to report first quarter earnings, missing on earnings as it saw a year-over-year sales decline of about 3%, where the retailer saw its customers purchase fewer discretionary items. Target's comparable sales also slumped 3.7%, marking a fourth consecutive quarter of declines. Target down by about 7%. Meanwhile, shares in TJX companies up by 7% as the parent company to TJ Maxx, Marshalls, and Home Goods posted higher quarterly sales driven by an increase in customer transactions. TJX also lifted its profit outlook for the year. Elsewhere, Lululemon announced it will restructure its product and brands team and said its chief product officer was resigning to pursue another opportunity. Lulu down by 7%. And CNBC is reporting that Amazon is planning to unveil a souped-up version of its decade-old voice assistant Alexa with generative AI this year. It will charge a monthly fee. Citing sources, the report also states that Amazon's Alexa offering will not be included in Amazon Prime subscriptions. Amazon up by about 0.5% so far today. I'm Tucker Silva, and that's Wall Street Watch.
This is Ask Todd on the Financial Exchange Radio Network. If you have an existing estate plan or are in the market for one, Todd Lutsky is here to answer your questions and help you plan for later life. Ask Todd is presented by Cushing & Dolan, serving Massachusetts and New England for more than 35 years, helping families with estate and tax planning, Medicaid planning, and probate law. Visit CushingDolan.com. Now, here's Todd Lutsky.
As promised, we're joined now by Todd Lutsky for Ask Todd. This is your chance to ask Todd your questions about your estate plan. So we've opened up the phone lines here at 888-205-2263. That's the number to call in order to ask Todd your questions. The number again is 888-205-2263. Usually we're only able to get 2 to 3 calls in, so make sure you get in line early to make sure that your call can be answered by Todd live on air. Here, that number one more time is 888-205-2263. Mr. Lutsky, how are you today?
I am never better, and you?
Well, was a little confused over the weekend.
What happened?
Well, I wasn't really sure why I needed a Geiger counter.
A Geiger counter?
But then it clicked.
You got it?
Yeah.
Oh, good. I get it.
Let's talk a little bit about... I want to talk a little bit about trust planning, Todd. Is there ever a size estate that is too small for trust planning?
And I think when we talk about potholes, which I know is the guide that we're giving away as we approach the end of the month, this is probably the first one on the list. I really don't want people to think that, my estate's too small to plan. I don't need to worry about it. I mean, I find is it possible to have an estate that's too small? Yes, I guess it is. But I think generally probably not. And maybe here's the guideline. Even if you're single and you have no kids, obviously if you have kids, you're married, you have assets, it can't possibly be too small to plan because there's loved ones that you want to take care of. But let's say if you're single and no kids, you might have some nieces and nephews, you might have some cousins, siblings, people that you are close in your life and you want to take care of. And let's say your assets consist of, I just got a house and,
sure,
and not a lot of other money. To me, that's enough. I mean, houses are big assets that need to get where you want them to go. And you should decide how to do that other than leaving it undone. Because if you have no will, now who gets it? Well, now you got to go to court and let the state decide who's going to get these assets. And that can never be good. Plus, it's going to probate. So, I mean, at least do a will to direct where your assets go. But I don't know if it's if there's just the one that's too small. If you have absolutely nothing, then yes, I guess you don't need an estate plan.
Talking with Todd Lutsky from the law firm of Cushing & Dolan. If you've got a question you'd like to ask Todd live on air, the phone number here is 888-205-2263. That number again is 888-205-2263. That's the number to call to ask Todd your estate planning question. Todd, let me take the other side of that.
Sure.
At what size estate does someone outgrow kind of more basic estate planning needs? When do you start needing something that's more complex?
And that's really a good question, too, because, we know that this estate tax law is changing. We've been talking about it for, a couple years now. We know it's getting closer and closer.
Is it end of next year?
Yes, it's the end of 2025, January 1, 2026. So it is quickly approaching, and that number is going to fall. So the estate tax exemption, let's say, indexed for inflation, it falls to, say, $7 million. And that's after the index. If you're married and you're worth $14 million, you're on the bubble, right? You're on the bubble.
Sure.
It doesn't mean you ever outgrow, so I'll clarify the language a little. When you talk about your foundation for estate planning, that's that ability to use both of your estate tax exemptions and double them. And so that's always the foundation. So if my estate is suddenly $20 million and I'm looking at a $12 to $14 million exemption range, I need to think right now that's not that I've outgrown my foundation, but what do I have to add to the estate plan that I might not have needed before? So that's an additional building block to do what we call more complex or sophisticated estate planning, to take advantage of the exemption that we have today before I lose it. So if I'm at 20 million and I can shelter almost 26 million today, 27 million today, how can I gobble up some of that exemption before it goes away? And that's the more sophisticated planning that you might have to add to your plan.
Talking with Todd Lutsky from the law firm of Cushing & Dolan. The phone number for the studio here so you can ask Todd your question is 888-205-2263. Still have another spot or two open, so again, call that number so you can speak to Todd right now about your estate planning questions. 888-205-2263. We're going to take a quick break here, but when we come back, it's right to your questions with Todd. That number one last time is 888-205-2263.
Ask Todd with Todd Lutsky every Wednesday at 10:30, only here on the Financial Exchange Radio Network. The U.S. Virgin Islands is the perfect destination for your next vacation. Visit St. Croix, St. Thomas, or St. John and experience incredible weather, iconic history, pristine beaches, world-class cuisine, and a vibrant nightlife. Book now and you might just make it in time for the St. Croix Mango Melee on July 7th. The family-friendly event offers food demonstrations and tastings, cultural dance performances, and the ever-popular mango eating contest. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all three islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com. Creating the right estate plan to help secure your future takes effort. There are plenty of mistakes that you can make, any one of which could have a dramatic and damaging effect on your financial strategy. Cushing & Dolan are experts in estate planning. Their brand new guide is called Detour Ahead, Estate Planning Blunders to Avoid. In it, you'll learn about these critical errors so that you can make the right decisions to always protect your assets. As an example, if you've created a trust more than 10 years ago and haven't updated it since, you're setting yourself up for problems. Cushing & Dolan's new guide will help you address issues like this. So call right now, 866-848-5699, and ask for your copy of our new free guide called Detour Ahead, Estate Planning Blunders to Avoid. That's 866-848-5699, or request it online from their website, legalexchangeshow.com. That's legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
If you want to leave behind a financial legacy for your family, you need a proper estate plan. Hi, this is Chuck Zodda from the Armstrong Advisory Group. In our new monthly guide, we'll explore how and why the estate planning process is crucial to help you build a plan that will afford you comfort and peace of mind as you enter your retirement years. The guide is called Leaving a Financial Legacy, and in it, we'll unpack ways to create a plan that takes into account your entire investment portfolio and your business holdings, including real estate. We'll also explore strategies on how to mitigate your risk from long-term care costs, which could affect you in the future. Call right now at 800-393-4001 to request a copy of our new guide, Leaving a Financial Legacy. That's 800-393-4001, or request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Are you looking to volunteer for an amazing nonprofit organization that helps our veterans? The DAV Department of Massachusetts Transportation Network needs volunteers right now. This network provides free transportation to and from any VA medical appointment for veterans of all eras. To become a volunteer driver, you do not need to be a veteran or a DAV member. You just need to have the willingness to help our veterans and have a valid driver's license. Sign up now at davma.org. That's davma.org.
There are crucial mistakes you can make during the estate planning process that may have a damaging effect on your financial strategy. Cushing & Dolan's new guide is called Detour Ahead, Estate Planning Blunders to Avoid. Get yours today and make the right decisions to protect your assets. Call 866-848-5699. That's 866-848-5699, or request it online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. You're listening to Ask Todd with Todd Lutsky on the Financial Exchange Radio Network.
All right, let's get right to your questions for Todd Lutsky. First off, we've got Paul in Connecticut. Paul, what's your question for Todd?
In an irrevocable grantor trust under two scenarios, one is you are subject to estate tax and the other that you are not, how do you facilitate getting step up on the assets given the recent ruling and the lack of clarity on multiple websites from attorneys I've read on that subject of getting step up within a grantor of revocable trust?
So this is the confusion, and it's unfortunate that other attorneys don't understand what this revenue ruling says. I'm familiar with it. We've been talking about it for an entire year. It is crystal clear to me that this revenue ruling that you're referring to does not change the rules at all regarding a step up in basis. It's basically confirming the exact same rules that have always existed. Let's go through them. 1, if you have an irrevocable trust, much of which might be one like I talk about, like a Medicaid type irrevocable trust. If you have an irrevocable trust in which you transfer assets but retain the right to, like, the income or the ability to change the beneficiaries of the trust, and you retain that right, then that makes the transfer to the trust an incomplete gift for gift tax purposes. And so 2036 of the code says if you transfer assets to a trust like that, where you retain the right to the income, then for estate tax purposes, that asset will be included in your estate as if you never gave it away. Again, it's going to avoid probate. It's protected from the nursing home. It's doing everything it's supposed to do, but it's not reducing your estate for estate tax purposes. I want inclusion, and that's why in that kind of trust it would be drafted for inclusion. And when it's included in the estate, you get the 1014A step up in basis for sure. Now, to your point, what about a grantor trust that is a completed gift for estate tax purposes. I transfer my asset to the trust and I'm not the trustee. I don't have the right to the income. I've not reserved those powers. I've cut the string, if you will, from that asset. So that asset will no longer be included in my estate when I die, because the desire was to have that reduce my estate and grow outside my estate. Lovely. That's what the goal was. That's what's done. Even though for income tax purposes, I retain a grantor power, causing me to be treated for income tax purposes as the owner. But when I die, if it's not included in my estate, I do not get the step up in basis. Whereas that revenue ruling was trying to say, because 1014A is an income tax code section, and I'm deemed the owner when I die, that I should get the step up, but it's not included, so you don't get the step up, which is exactly how it has always been. Confusing for some. I hope I cleared it up, because there is and should be no confusion about it. And that said, there's plenty of confusion about potholes to avoid in your estate planning. This could be one of them, right? How do I know which trust is right for me, right? How do I know what to do in my estate plan? This is a guide called Estate Planning Potholes to Avoid. As we near the end of the month, if you've not done your planning, this is for you. It's going to show you things to think about that you might not have thought about going forward, and avoid those potholes as you're going to get your plan in place. If you've done your planning, it's going to show you why you might need to revisit it and maybe change it, right? Please, some of the tips: don't rely on a will, as Chuck said. Don't think you have a nominee realty trust and that's all you need. Maybe I haven't looked at my plan in 10 years. Maybe I moved. Maybe I remarried. All things to think about, and how those things impact your plan. It's good for the planner, good for the person who hasn't started their planning. 866-848-5699 or legalexchangeshow.com. You can download it there. Again, 866-848-5699 or legalexchangeshow.com.
Todd, I've got another caller for you. Let's go to Dan in Peabody. Dan, you are on with Todd Lutsky.
Hello, Todd. First, I have to say that my wife passed away in October.
Oh, I'm sorry to hear that.
And we were in the middle of a divorce.
Oh, boy.
Do I have divorce for she had a house, I had a house,
So let me ask you this. I've got to interrupt a minute. So your wife passed away before you completed the divorce?
That's correct.
So you were technically married when she passed?
Absolutely.
So what's your question?
Well, am I entitled to any of her assets?
Was there any kind of estate plan in place on the date of death?
I believe they changed the two kids involved changed the trust that we had.
Prior to the divorce and prior to the death?
That's correct. But she had Parkinson's and Parkinson's dementia.
So you're going to have to see whether or not there's a capacity problem to see whether or not when she changed the trust she had capacity to do that. And you might be able to challenge that to say that was ineffective, right? And of course, it can't be changed after you file for divorce. Once somebody files for divorce, there's an automatic stay on all assets. You can't change things. So you have to check with your divorce lawyer to see when all those dates coincide and how that may or may not impact the plan. But once you find out what the estate plan was, you need to find out what possible agreements were in place regarding the divorce prior to her death, if any. And then you can determine what estate planning documents were in place that were actually effective, and then you got to see what they say. Now, interestingly enough, if you had any jointly held assets on the date of death, those automatically pass to you as the surviving joint owner. So, yeah, I think you would get that. but I'm not sure how that's going to impact the divorce. Obviously, you don't need a divorce anymore, but, that is absolutely one of the potholes that I talk about in an estate plan, right? What if somebody got a divorce? Go back and check your planning. Get it done. That's a pothole, a red flag to remind you of something to do. So in your case, find out what was in place. Challenge something if you think capacity didn't exist when the change was done. Look at the final documents and see how all the other assets were owned on the date of death. It might affect what you're going to get, and then you'll have to deal with the divorce issues later. So hope that helps.
Mr. Lutsky, thank you so much for joining us today.
Always a pleasure. Thank you.
This has been Ask Todd on the Financial Exchange Radio Network. Ask Todd with Todd Lutsky has been presented by Cushing & Dolan, serving Massachusetts and New England for more than 30 years, helping families with estate and tax planning, Medicaid planning, and probate law. Call 800-393-4001 or visit CushingDolan.com. The views expressed in this segment are solely those of Cushing & Dolan. Armstrong Advisory does not provide any legal or tax advice. Please consult with your legal or tax advisor on such matters. Cushing and Armstrong do not endorse each other and are not affiliated. Creating the right estate plan to help secure your future takes effort. There are plenty of mistakes that you can make, any one of which could have a dramatic and damaging effect on your financial strategy. Cushing & Dolan are experts in estate planning. Their brand new guide is called Detour Ahead, Estate Planning Blunders to Avoid. In it, you'll learn about these critical errors so that you can make the right decisions to always protect your assets. As an example, if you've created a trust more than 10 years ago and haven't updated it since, you're setting yourself up for problems. Cushing & Dolan's new guide will help you address issues like this. So call right now, 866-848-5699, and ask for your copy of our new free guide called Detour Ahead, Estate Planning Blunders to Avoid. That's 866-848-5699, or request it online from their website, LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
Still a lot to come as we continue through the financial exchange. We'll talk a little bit about why all those economists who were forecasting recession, why were they wrong last year? What gives? We've also got a little bit of news on buy now, pay later firms and a rule that the CFPB is attempting to pass in order to treat them a little bit more like credit card companies. And then a couple housing stories. First, do you sell your home or rent it out? And number two, just talking about how expensive it is getting to buy a home in the greater Boston area. All that and more coming up on Hour 2 of the Financial Exchange.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutsky with your Financial Exchange Quick Tip of the Day. And today we're talking about the top estate planning mistakes to avoid. Todd, what is the downside of adding your kids to your accounts or adding their names to your real estate deeds as a joint owner? Won't this avoid probate?
You're absolutely right. It would avoid probate, but there are better ways to avoid probate than just doing something simple, right? Simple isn't always better. Throwing a name on an account or adding a designated beneficiary or a joint owner on a piece of property might not be the best way to go. Here's the problem. If you name one of your children as a joint owner and you have 3 children and you put that child on just because it's convenient and they're geographically close to you, well, you could be accidentally disinheriting your other children because this property, this asset will only go to that child. That child doesn't have to give it to the other kids. So that's a problem. And if you put your name, if you add a child's name to your real estate, now you're exposing it to that child's creditors, that child's potential divorces. That's never good. And plus, you've lost control over it. If you try to sell it, you need that kid's permission, and half the money would go to that kid. Please, folks, set up a trust, fund your trust much better than just trying to do it shorthanded and just give away assets or adding names to accounts.
Todd Lutsky and the estate planning experts at Cushing & Dolan have written a brand new guide that details the estate planning blunders to avoid. You can request this brand new guide by calling 866-848-5699. That's 866 848-5699, or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
This is the Money Matters Radio Network. WBNW 1120 AM and W275CM FM. Concord, Boston. The Money Matters Radio Network. The U.S. Virgin Islands is the perfect destination for your next vacation. Visit St. Croix, St. Thomas, or St. John and experience incredible weather, iconic history, pristine beaches, world-class cuisine, and a vibrant nightlife. Book now and you might just make it in time for the St. Croix Mango Melee on July 7th. The family-friendly event offers food demonstrations and tastings, cultural dance performances, and the ever-popular mango eating contest. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all 3 islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
Are you retired like me and you just found out you owe the IRS a ton of money? Well, what would your life be like if they took your retirement savings away from you? They can do it, and your property. If you owe the IRS back taxes or you haven't filed in a while, the Tax Relief Line is here to help you. They can stop the IRS from taking your retirement savings. If you qualify, you could have your tax bill reduced to zero. That's right, if you're retired and you owe the IRS a lot in back taxes, you could have your entire tax bill reduced to zero due. The IRS has now hired thousands of new employees, so they're ready to come after you. Don't let them take your retirement savings or property. Make this free call now.
800-251-2153. 800-251-2153. 800-251-2153. That's 800-251-2153.
Are you looking to volunteer for an amazing nonprofit organization that helps our veterans? The DAV Department of Massachusetts Transportation Network needs volunteers right now. This network provides free transportation to and from any VA medical appointment for veterans of all eras. To become a volunteer driver, you do not need to be a veteran or a DAV member. You just need to have the willingness to help our veterans and have a valid driver's license. Sign up now at davma.org. That's davma.org.
There are crucial mistakes you can make during the estate planning process that may have a damaging effect on your financial strategy. Cushing & Dolan's new guide is called Detour Ahead, Estate Planning Blunders to Avoid. Get yours today and make the right decisions to protect your assets. Call 866-848-5699. That's 866-848-5699 or request it online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and our guide this month is titled Leaving a Financial Legacy. Mike, one of the biggest assets that any family owns is typically the primary residence. How do you have to navigate how to leave that to the next generation?
Well, sure, and important because unlike, say, a bank account where you can leave a child as a beneficiary, that's not really possible with a home. And so, sometimes at least having just a basic estate plan, which according to a report from lawdepot.com, 73% of U.S. adults don't have a documented estate plan. But, that's the starting point here, is developing an estate plan for your assets after you go.
Other things that you got to keep in mind, I think, hey, if you have multiple children, is there one that wants to inherit that home? And how do you balance that with the other assets that you might have so that children are being treated fairly?
Yeah, there's all sorts of concerns here, right? As I age, what if I end up in a nursing home? How do I protect some of that stuff? And let me just tell you, it is an area that has a high propensity for mistakes when it comes to how to handle your personal real estate, especially later in life. So definitely something to be aware of. Keep an eye on understanding not only the tax consequences of one action or another, but also the legal consequences of one action or another.
The guide is titled Leaving a Financial Legacy, and there are two ways that you can request it. The first is by calling 800-393-4001. The second is by going to ArmstrongAdvisory.com. Again, it's titled Leaving a Financial Legacy. You can request it at ArmstrongAdvisory.com or by calling 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor that provides investment advisory services. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else, and do not guarantee profit. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Marc Fandetti. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting DAV5K.Boston and making a donation today. The DAV 5K Boston is presented by Veterans Development Corporation. This is the Financial Exchange with Chuck Zodda and Marc Fandetti.
Chuck, Mark, and Tucker with you right now, and really boring day in markets at the moment. The Dow is down 14 points. The S&P is up 1, and the NASDAQ is up 19. So no major index moving more than 0.1% at the moment. 10-year U.S. Treasury, what's going on there? Nothing. It's completely flat at 4.414%. Oil, West Texas Intermediate, down 40 cents a barrel to 78.26. AAA National Average for gas prices up 1.3 cents to 361 1/10. This was following a brief one-day drop below $3.60 a gallon, so right back above it at the moment. And then we've got gold down $34.10 to $23.91 and 80 cents.
You know what's funny, Chuck? It seems boring to us, but it's like looking at a tug of war where the midpoint doesn't move, but there's intense activity on either side. I'm not saying that things are frantic out there, but they could be, and we wouldn't know it by looking at movement in the averages. The forces could be just enough to keep things unchanged. I don't know if there's any validity to that, but it just occurred to me. We don't know what's going on.
No, the big thing overall is that this is a market that, got up north of 5,300, I think a week ago. I think it was last Wednesday or Thursday that it did. And it's just kind of been hovering. It's just kind of like, what do we do now? We're here. Do we keep going? No, we'll hang tight here. So that's kind of what we're seeing.
It's funny how we give the market a personality like that.
It is.
I'm just making it's a half-baked philosophical point.
No, the market, it's very anthropomorphic. It has its own thoughts, its own desires. It has foods it likes, things that it doesn't like to eat. And right now it's out there in, the 89-degree sun saying, I'm just going to chill today, hang by the pool, relax.
There is a commentator, Jim Grant. Some of you have heard of him. I don't read him anymore.
Yeah.
But he wrote a book about did Warren Buffett coin the term Mr. Market? It wasn't Jim Grant. It wasn't Warren Buffett. It was it was like Ben Graham. they called it. They gave it a
Ben Graham
personality.
Yep, Ben Graham.
Mr. Market is sometimes manic. He's sometimes depressed. He's never even keel.
Except for right now.
Except for right now, Mr. Market is
cool as a cucumber, hanging out in the
enjoying
shade,
cannabis or something.
Yeah, if he's got it, it's whatever.
But as soon as he's off his meds, we're screwed.
That's how it usually works. Let's talk a little bit about why forecasts for a U.S. recession have been wrong over the last couple of years. Now, these first started really popping up back half of 2022, but even first half was, hey, rates are going to go up because of inflation, and you're likely to see a recession as a result of this. Jamie Dimon has been calling, recession every 6 months like clockwork for, the last 2.5 years now. And the question that's out there is, hey, look, despite all of the predictions and calls for a recession, at each instance, really the end of 2022 and Q3 of 23, at each instance where things could have gone that way, we saw a strong U.S. economic rebound. And the obvious question is, what gives, Mark?
Economists are terrible, and these aren't all economists. Some of them are just armchair types who like to give their opinion about the direction of the economy. Economists are not good at forecasting recessions. Many Nobel Prize winners have said we just shouldn't do it. They just shouldn't do it. There are different ways to forecast growth. You can do top-down approaches, which I like because they're simple and someone with my training can do it. Others employ much more sophisticated methods like the PhDs that work for the Federal Reserve. There's enormously complicated rich models that tend to not do a better job than the naive approach of saying, if growth went up last quarter, growth tends to be persistent. I expect it to go up this quarter as well. You can apply a little bit of judgment to that, but that naive approach does just as well as many of the more sophisticated approaches, strangely enough. So I have nothing really insightful to say other than that people should not try to forecast GDP, or we should take those predictions with a grain of salt. There are just too many variables governed by randomness that factor in, and as a consequence makes predictions dubious.
Why is it so fashionable to try to forecast recessions then?
For the same reason why we speculate about the afterlife and the existence of a supreme being, and the need to know, the need to want to know, the need to exert control over uncertain things. So if I forecast GDP, and I do it here using simple time series methods, it gives me a little bit to see a number come out to 0.1%, gives me a strange, anybody who's ever worked with a spreadsheet knows this.
Sure.
There's something very fulfilling about doing a calculation, I'll just say in a spreadsheet, and getting a number with the seeming precision of 1/10 or 100%. It empowers us. It gives us a sense of control over something that is inherently uncertain and unsettling. So people want to know the future. It's the same reason we go to astrologers, or some of us do anyway.
When's the last time you've been?
It's been almost a week.
Yeah.
I need to.
Yeah, I try to do it 3 times a week: Monday, Wednesday, Friday. Keeps
but
me centered.
some people swear by it.
I
they also have a good sense of humor about it. They know they're just trying to exert control over the uncertain and uncontrollable. And I think that's why we like to hear GDP forecasts and predictions generally. What do you think? That's just my.
I totally.
I totally think you're nuts.
No, I think that's 70% of it. 30% of it is, in this business, if you call a recession correctly, you make a name for yourself.
Only briefly, though. You're a flash in the pan, unless you can repeat it.
But everyone keeps calling you to ask
for
what you think in the future.
For like a month, though, and then they realize that you were the lucky coin flipper. By that, I mean you guessed right. Not to say your methods weren't sophisticated.
Sure.
But invariably, again, because chance is so dominant in this process of GDP or inflation forecasting, any economic variable really. Some are more persistent than others, but largely they're governed by chance. So the economic forecaster getting their 15 minutes of fame, they tend to be, again, flashes in the pan. I know I'm being redundant there.
No, and this also gets at something that I think you have to be really aware of, and I've talked about this before, but whenever you're reading something from, whether it's an economist or a market participant or whoever it might be, you have to understand the context of that person's past views, because there are some people who are just perma-bears or perma-bulls, and you can't trust their opinion because they only have one opinion and it never changes.
And they are the broken clock as a result.
Correct. The one that I always come back to is David Rosenberg, who has been bearish on stocks since 2002. And just like constant, like, oh, this is going to be the year that things fall apart like this. And if you just read something by him without understanding that context, it doesn't really do justice to where he fits in the mosaic of all the information that's coming in. You know, there are lots of smart people also that are just they might even be good economists, but they're really bad at translating what happens in the economy into what happens in markets.
Let me give you a different angle on this. It's very hard for people who aren't trained in forecasting to distinguish between, say, weather meteorology and economic forecasting. Those are different, I'll call them domains. In weather forecasting over the short term, the models are really good.
Right. We've shown the data. It's like if you're looking at like 1 to 3 day forecasts, you're like 90% plus accurate.
Why is that? I know you know the answer. It's physics. Once things sort of line up, we know what direction the forces are pointing in. We can say there's a 70% likelihood of thunderstorms tomorrow, and in 7 out of 10 days when the circumstances are similar leading up to that point, you get that result.
Sure.
In economics, you don't have, in other soft sciences, it's not just econ, you don't have stable relationships with which to make predictions. So Rosenberg's Achilles' heel is that he relies on valuations a lot. The problem is the relationships or the relationship between valuations and future returns has broken down since the 90s. So models that worked really well up until the 90s don't work well anymore. Similarly, models that related inflation to unemployment worked really well up until, some would say now is not always, but they worked reasonably well up till the Great Recession. Then those relationships decoupled, they kind of fell apart. So past models failed. That's why economic forecasting is so hard. These things are not stable.
I think another part that we kind of have to cover in that is it's another example of the power of compounding, in my opinion, where, look, if you're looking at, forecasting what's going to happen 3 to 5 days from now, there's just less time that stuff can change. Like, let's say that each day you are losing 1% in accuracy.
Okay,
so the first day you're 99% accurate, the next you're 98. But remember, if you're multiplying, eventually it compounds and you get to really bad accuracy pretty quickly. And in reality, it's more than 1% a day that you lose in accuracy. It's probably close to 5. So like day 1 you're 95% accurate, day 2 you're 89, day 3 you're 83%. Like it goes down quickly. In economics, when we talk about recession forecasting, most people are trying to project out like 6 to 12 months. Why would you expect to have accuracy on that in something that, as you note, it's not physics? We like to think of economics as being physics and a hard science because there are numbers involved. But there are no
It's funny,
there aren't. It's far closer to like sociology than anything else.
You talk to any economist, they get this.
Yes.
Like real economists, not the armchair journalist types who think they can forecast GDP. But no economist takes forecasts all that seriously. It's like people say, well, economists like to. No, actually, they're quite aware of the limitations of the tools that they have at their disposal.
Like, I generally don't feel comfortable looking out more than about 3 months or so. And even there, it's kind of like, well, there's a chance this could happen, and there's a chance. It's trying to predict things that are going to happen like a year in advance. I have no idea, and quite honestly, no one does. Let's take a quick break. When we come back, we're going to be joined by Omair Shariff talking about inflation right after this.
The latest news on inflation, the Fed, the economy, and how the markets are reacting every morning, right here on the Financial Exchange Radio Network.
Are you looking to volunteer for an amazing nonprofit organization that helps our veterans? The DAV Department of Massachusetts Transportation Network needs volunteers right now. This network provides free transportation to and from any VA medical appointment for veterans of all eras. To become a volunteer driver, you do not need to be a veteran or a DAV member. You just need to have the willingness to help our veterans and have a valid driver's license. Sign up now at davma.org. That's davma.org.
There are crucial mistakes you can make during the estate planning process that may have a damaging effect on your financial strategy. Cushing & Dolan's new guide is called Detour Ahead, Estate Planning Blunders to Avoid. Get yours today and make the right decisions to protect your assets. Call 866-848-5699. That's 866-848-5699. Or request it online at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
A recent report from LawDepot.com says that only 3 out of every 10 adults in the U.S. have taken the time to create an estate plan. Don't be a member of that group. Hi, this is Mike Armstrong from the Armstrong Advisory Group. A sound estate plan can give you control over your assets and peace of mind as you enter your retirement years. Our new guide is called Leaving a Financial Legacy, and in it, we look at estate planning from a financial perspective. It's important to have a strategy that addresses your investment portfolio and all of your holdings, including real estate. We'll also focus on other issues, such as how to manage long-term care expenses that may affect you down the road. Get your guide today by calling 800-393-4001. That number again is 800-393-4001, or you can also request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The U.S. Virgin Islands is the perfect destination for your next vacation. Visit St. Croix, St. Thomas, or St. John and experience incredible weather, iconic history, pristine beaches, world-class cuisine, and a vibrant nightlife. Book now and you might just make it in time for the St. Croix Mango Melee on July 7th. The family-friendly event offers food demonstrations and tastings, cultural dance performances, and the ever-popular mango eating contest. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all 3 islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com. Creating the right estate plan to help secure your future takes effort. There are plenty of mistakes that you can make, any one of which could have a dramatic and damaging effect on your financial strategy. Cushing & Dolan are experts in estate planning. Their brand new guide is called Detour Ahead, Estate Planning Blunders to Avoid. In it, you'll learn about these critical errors so that you can make the right decisions to always protect your assets. As an example, if you've created a trust more than 10 years ago and haven't updated it since, you're setting yourself up for problems. Cushing & Dolan's new guide will help you address issues like this. So call right now, 866-848-5699, and ask for your copy of our new free guide called Detour Ahead, Estate Planning Blunders to Avoid. That's 866-848-5699, or request it online from their website, legalexchangeshow.com. That's legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Miss any of the show? Catch up at your convenience by visiting financialexchangeshow.com and clicking the on-demand icon where you'll find all of our interviews and full shows. This is your home for the latest business and financial news in New England and around the country. This is the Financial Exchange Radio Network.
As promised, we're now joined by Omair Shariff here to talk a little bit about the current state of inflation here in the United States. Omair, how are you today?
I'm doing well, thanks. How are you?
We're doing well as well. And when we look at the inflationary picture, I know, there was a lot of excitement on the day of the release last week because, hey, we printed, 0.3% for the month instead of, 0.4, which it had been at for the first quarter. Is there a sense that there's any meaningful progress being made, or was this just more some storytelling that, hey, at least we didn't print 0.4 again?
Yeah, look, I think there's 2 things. One is a sense of relief that some of the, really strong readings we had in the first quarter were sort of behind us, and they're not indicative of, that pace continuing for the rest of the year. So certainly that sense of relief. But secondly, I think when you kind of dig through all the, various details of that report, I think there are some signs, especially on that, long-awaited slowdown in rent inflation that we've been waiting for, that's finally starting to hopefully take hold. And if that does, that will go a long way in helping us get down to the Fed's target over time.
Can you explain to our listeners what's going on with owner equivalent rent? Because it's something that is a little bit inside baseball and is still really important to what's going on here.
Yeah, it is. So I think the most important thing to understand is it's not home prices. It doesn't measure what the cost of your home is. The idea is that the house is an investment, and you're sort of consuming a flow of services from living under there. So the idea is almost like, what would you pay to have a roof over your head, essentially? That's the consumption part you want to capture in a price index. And that has kind of stayed elevated over time. And a lot of this really is just the way the index is constructed. It's what people are paying to lease a new apartment, what maybe your renewal looks like if you are renewing your lease. And there's a lot of people in the market who are obviously, they're not renewing every single month. So it's really the average rent over time, sort of, run through some models to sort of look like what it would cost a homeowner to rent to themselves. It's almost like the opportunity cost of owning your home instead of renting it out to somebody else. And this is a huge part of the index. In general, home ownership is just so big in the United States. So this is a big part of the index, and we've been waiting for it to slow down. And it looks like, we're getting some signals that slowdown could be coming this summer.
This is one piece of the inflationary picture, but one of the things that we had noted over the first quarter was that, yes, that's a major factor. Sure, auto insurance is too, but there were a number of categories where we were starting to see signs of broadening inflation. Is that something that reversed itself in the April report, or is that still a concern out there?
I think it is definitely concentrated right now in the shelter component, in this rent and OER component, because, that's running north of 5% still, and we're waiting for that to slowly come down over time. You mentioned auto insurance is running about, I think, 22% year over year. But you were seeing a slowdown in a lot of other categories. So we're finally starting to see, for example, new car prices decline on a month-over-month basis more steadily than they have been declining. Food prices at this stage are only up around, I should say grocery store prices in particular, are only up around 1.2, 1.3% year over year. So you are seeing, slowdown in many more categories now than you were even, let's say, 6 months ago. A lot of what we got in the first quarter that was really strong inflation data was concentrated in some of these services in particular, like auto insurance, like auto repair. But I think in April, we've gotten back to more of what we were seeing in the back half of last year, when, as you remember, we got a string of much, much better inflation prints than we're expecting. And I think we're getting back to that trend now, starting with this April report.
Whenever we talk about inflation, it's often referred to as a combination of factors that can feed into it. You can have too much demand, too little supply, expectations. What are you seeing right now from the demand side of things? Because I feel like this is an area that a lot of retailers are reporting, weak demand in different places, but it's not necessarily matching up with the top line consumer spending numbers that stay pretty strong right now.
Yeah, I will say we did get a pretty soft, retail sales report in April. The last several months, I would say, we have started to see a little bit more of a cooling on that consumer demand side. But in general, I think demand still overall remains pretty strong. You can take travel as a good example. You look at any of the earnings reports of the airlines. And if you've flown at all recently, the planes are still packed and people are still traveling. What's different now is there's been much more healing on the supply side. 2 years ago, we had only about 90% of airline capacity that we had compared to 2019 before COVID. Now we're exceeding that amount. And you're getting back to a situation where, there's less of an impact from jet fuel prices than there was even a year ago. There's essentially more seats in the sky. And, we're starting to see that put downward pressure on things like, airfares, even though overall travel demand is still strong. So to me, a lot of it has been the healing on the supply side has really helped quite a lot. We've seen inventories increase a lot over the last 2 years for things like, furniture and apparel and other items that were starting to become a bit more difficult to manufacture and import. And so that, I think, has really helped quite a lot. But overall, I would say, wage growth moderation has also probably at the margin helped. Wages are getting down to a level that the Fed would kind of like to see them growing at now compared to where they were, let's say, 2 or 3 years ago. So all of those factors, the supply side healing has probably been the biggest one to date. But now the rest of the macro factors, like a bit of a cooling in the labor market, for example, cooling wage growth, those are also, I think, starting to kick in and help to put downward pressure on the overall inflation picture.
Very good. Omair, thanks so much for joining us today. We appreciate it, and we will catch up with you soon.
Thank you.
That is Omair Shariff talking about the current state of
If you served in the Marine Corps, by now you know about the contaminated water problem at Camp Lejeune. If you were stationed or worked at Camp Lejeune from 1953 to 1987, you probably have a lot of questions. We have some answers. You could be entitled to compensation. Billions of dollars are being allocated to pay for damages to anyone stationed at Camp Lejeune during that time. Unfortunately, it appears that officials may have known the contaminated water problem existed and did little to protect their men. The Semper Fi code was not honored. If you or someone in your family has developed a serious illness, including various forms of cancer, call this Camp Lejeune legal support line right now. You can't turn back the clock and change what happened, but you can certainly call right now and learn your rights as a Marine. Here's the number.
800-477-1736. 800-477-1736. That's 800-477-1736. Paid for by Legal Alert Line. We are the Debt Destroyer Network. Any debt you have, credit card, tax, student loan debt, call now for free information that helps you destroy your debt. It's great advice. Plus, when you make this free call now, we have debt destroyer experts ready to help. They can show you how to destroy your debt and get your life back on track. Debt problems don't have to be overwhelming. You can live stress-free and debt-free. Credit cards, medical bills, IRS tax problems, even student loan debt. Learn about free programs offered by the credit card companies, hospitals, and even the government that can help slash your debt. Call the Debt Destroyer now for free information. Call now. 800-430-8804. 800-430-8804. 800-430-8804. Again, that's 800-430-8804.
The U.S. Virgin Islands is the perfect destination for your next vacation. Visit St. Croix, St. Thomas, or St. John and experience incredible weather, iconic history, pristine beaches, world-class cuisine, and a vibrant nightlife. Book now and you might just make it in time for the St. Croix Mango Melee on July 7th. The family-friendly event offers food demonstrations and tastings, cultural dance performances, and the ever-popular mango eating contest. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all 3 islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and our guide this month is titled Leaving a Financial Legacy. Mike, one of the areas where we see a ton of confusion these days is with retirement accounts and leaving them to the next generation. It's just a complicated place right now.
Yeah, and to start, some retirement accounts were actually looked at by some as a really successful planning tool for generational planning, especially when you talk about Roth IRAs, for example. And the rules around that all changed just a few years ago. And so really understanding the taxation of these different assets is important when it comes to leaving a legacy.
When we talk about what goes into those retirement accounts, this has to be part of the thought as well in terms of minimizing taxation during your lifetime and that next generation's. You have to coordinate what's inside of them just to minimize the taxes during that time as well.
Yeah, so from that perspective, you have non-taxable assets like a Roth IRA. You have taxable assets that generate a 1099 every year. You've got traditional IRAs and 401ks. all of these have very different rules in terms of how they're treated, but the biggest change had to do with retirement accounts, specifically 401ks and Roths, and the rules that impact beneficiaries of those assets. And so if you're trying to utilize them as a legacy plan, important that you understand the new rules.
Our guide is titled Leaving a Financial Legacy, and there are two ways you can request it. The first is by calling 800-393-4001. The second is by going to ArmstrongAdvisory.com. That phone number again is 800-393-4001, or you can request it at ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Find daily interviews and full shows of the Financial Exchange on our YouTube page. Like us on YouTube and get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network.
All right, let's do a little bit of trivia here on the Financial Exchange. On this date in 1859, Sir Arthur Conan Doyle was born in Edinburgh, Scotland. While working as a doctor, Doyle created his most famous literary character, Sherlock Holmes. Despite his ambivalence toward his creation, Doyle would spend over 30 years writing stories about him. So, trivia question today. How many Sherlock Holmes novels did Arthur Conan Doyle write? Once again, how many Sherlock Holmes novels did Arthur Conan Doyle write? Be the eighth person today to text us at 617-362-1385 with the correct answer, and you win a Financial Exchange Show t-shirt. That's 617-362-1385, and the eighth correct response will be our winner. See complete contest rules at financialexchangeshow.com.
Mark, let's talk a little bit about gold. There's a piece in the Wall Street Journal. It's titled Gold's Latest Allure. It's sanctions proof. Your thoughts on this piece?
There are lots of reasons to take gold seriously. Institutional investors tend to poo-poo it, not all but many, because it isn't generative. Unlike stocks, for example, it doesn't participate in economic growth via earnings. When you buy a company, you buy a share of its future growth. Or better yet, when you buy an index fund, you buy a share in all publicly traded companies' future growth. So if the economy grows, which it will, unless things go horribly off the rails, stocks should over long periods of time go up. I'm sorry for all the background, but that's a fundamental point that all so-called asset allocators follow when they're investing your retirement money. Gold's different. It's not generative. There's no dividend. And though it is an input, like other metals, into making things, it doesn't have a yield, which I guess is the same thing as saying there's no dividend. Yet we own it because there have been times like the 70s when it went up with inflation, so you could call it an inflation hedge, even though its relationship with inflation is way more complicated than the experience of the 70s would suggest.
Yep.
And it's a long-winded answer, but I want to point out that it's easy to get excited about gold right now, and there are valid reasons to own it. But in real terms, and by that I mean deflated or inflation-adjusted terms, it was higher in many periods over the last, say, 4.5 decades. So the price of gold we all know is about $2,400 right now.
Yeah.
I'm looking at month-end data here. So I adjusted that for inflation, went back as long as a little database we use provides gold prices for. And you would think that $2,400 would be some kind of record, and it's like not even in the top 10 month-end inflation-adjusted prices since 1980.
What's the highest you have?
1980. Thanks for asking. January 1980. In $1984, this is the deflator that we use. I'm sorry for all the numbers.
Yeah.
But I feel like you have to say that, otherwise you run the risk of giving the wrong impression. In deflated dollars, using the CPI, which is the right way to think about the price of anything, you want to compare it to other periods in apples-to-apples terms, $837 reached in January of 1980. The inflation-adjusted price today, I'm using month-end April data, is $736.
Okay.
That means if you bought it in 1980 and held it, you would have made what on the S&P? Like 25 times your money. I'm pulling that out of thin air, but it's probably not that far off. on gold, you would have lost money. Now, I just compared real to nominal there. I apologize. It's probably more like 12 to 13 times your money in stocks in real terms, whereas gold, you would have lost money. But you might be thinking, but I've owned gold for at least a couple decades and I've made money. And it is true that depending on when you start, for example, the rolling 20-year return on gold is a little over 10%. I'm now doing nominal, I'm doing nominal here, not real. So it's looked good relative to stocks over the past 20 years. But over the past 45, which is probably closer to, say, a retirement investor's horizon, it don't look so good.
The fascinating thing with gold and stocks, and I say this quite often, is, and I wish I had a better way to explain why this is the behavior that we see. Investor behavior with regards to them should be flipped. Because investors love to just trade in and out of stocks. They're like, oh, the economy's slowing down, I'm going to sell my stocks. Oh, the economy's speeding up, I'm going to buy them. When in reality, unless you're like really good at doing this, and generally like if you're just managing money for yourself, you're probably not, because you could make a lot more money managing it for someone else and not taking the risk personally then. Unless you're like really, really good at it, the best thing to do in most cases is you just, as you noted, own stocks for the long term, because most people are not good at timing those entries and exits. On the other hand, with gold, people say, I got to own it for the long term, like it's a long-term inflation hedge, when the data suggests, hey, most of the money is made in these really short periods of time where it goes up in value dramatically over like a 1 to 3 year period.
This is true.
It's actually much more useful as a trading instrument because most of the growth happens in short periods of time and that does nothing for like 8 or 9 years. But investors behave the exact opposite way on it. They love to own gold forever and trade in and out of their stocks, whereas the data suggests you're better off doing the opposite.
Yeah, excellent point. I think understand the characteristics of what you own and what it's supposed to do in your portfolio.
Yeah.
Stocks are generative. They're tied to the fate of the economy. Gold is there for something. If you own gold, gold or any commodity is there for something different. Some people own it to hedge inflation. I think its relationship there is flimsy. Others own it as a hedge against crisis or against the dollar, say losing credibility. That's a legitimate reason, as long as it's owned in moderation, I guess, but very different serves a very different role than equities, than stocks.
And also remember, if you are owning it for that reason, hey, what happens if there's instability? Then you're often talking about owning physical gold. And if that's the case, it's how do you secure it? How do you make sure that it's, safe? How do you take care of it? Because that's something that you have to deal with something physical that's very valuable that you don't have to worry about if it's in an investment account.
The U.S. Virgin Islands is the perfect destination for your next vacation. Visit St. Croix, St. Thomas, or St. John and experience incredible weather, iconic history, pristine beaches, world-class cuisine, and a vibrant nightlife. Book now and you might just make it in time for the St. Croix Mango Melee on July 7th. The family-friendly event offers food demonstrations and tastings, cultural dance performances, and the ever-popular mango eating contest. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all 3 islands and plan the ideal vacation for you and your family. America's Caribbean Paradise is waiting for you, so head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
I want to talk about this piece from the Wall Street Journal. It's titled, TV Networks Embrace Their Aging Audience with New Mantra, Age Doesn't Matter. And what this piece is talking about is how you've got TV networks now. They're kind of leaning in 2 directions. The first is anything millennial related, because millennials are now the largest generation in the country. But the second largest is still the baby boomers. And so you've got, when you look at legacy traditional TV programming, it's really skewing towards the boomers because most of the millennials have gone towards streaming services. And so you've got things like the Bachelor franchise that rolled out their Golden Bachelor that was, this year. The star was not, some 28-year-old with a spray tan and, bulging muscles and this. It was a 72-year-old. And they're kind of leaning into, our audience is older, but they've got a boatload of money. Wouldn't you want to advertise to that audience? And I think that's kind of cool.
Yeah, that's one thing we should have seen coming because demographics are baked into the cake.
I have another tangent that I want to take on this. And not related to the television industry. I want to talk about tech. Mark, who are when you think of like the 5 tech founders in the United States that have had kind of the most wide-ranging impact, name them for me.
How far back do you want to go?
As far as you want.
Edison.
No, last 70 years.
Watson.
Post-World War II, please.
I guess Gates, Wozniak. I was going to say Jobs, but I think of him as more of a salesman.
Throw him in there. He's still influential.
Sure. The Google guys.
Sure.
Larry Ellison. You'd probably be remiss to the Oracle guy.
Zuck.
I suppose. Yeah, a little reluctant.
I'm not saying that I love the guy, but I'm saying like his influence is undeniable.
Undeniable. And there are a bunch of others, probably, right?
Do you guys... Who are the like big up-and-coming tech companies now? Who are the ones that people are excited about today?
NVIDIA.
Who else? OpenAI.
OpenAI, yeah.
Right? Like,
Yeah.
Do you guys find it a little curious that all of the previous, the stuff that was amazing, that was, next level, next gen in technology, was created by a bunch of 22 and 23-year-olds?
That's when your mind is most plastic and fertile.
There is no company out there right now that's doing that stuff with founders that age. And I don't know what to make of that, but like...
Well, we don't know about it, but they're getting scooped up so quickly. Right? It's got to be, Chuck. Look
maybe
at this kid on TV right now. This kid who just rolled out of bed. I don't even know the context. All I know is Scale AI, presumably which he represents because he doesn't look like a reporter, just raised $1 billion.
All I'm saying is that the most exciting technology companies that everyone's talking about, like people were talking about Facebook, like not when it went public. It was a highly anticipated IPO because it was huge 10 years, not 10 years, but 5 years before it went public. Yeah. Microsoft, we saw how that transformed the world over the 15 years after it went public into the 1990s. Like you could see what was happening there. And I find it really interesting that when you look at who leads like the biggest and strongest and most, dominant technology companies now, and kind of we're trying to figure out what comes next, even the people that are leading those what comes next companies are not in their 20s. They're in their 40s, 50s, and 60s.
But the people doing the innovating might be.
But we're not, like, who are they? Like, everyone knew who Mark Zuckerberg was.
This dude here who... Sorry, I'm
pointing
at the TV.
Like,
you guys
I'm
can't
looking
see
at him.
it.
I don't know who that guy is. He has no name.
He just raised $1 billion.
Alexander Wang.
I don't care. Like, you don't know what... If I said
He's
the
not
name
a household.
Alexander Wang to anyone...
A lot of people didn't know who
Bill
Bill
Gates... I don't know who that guy is.
Yeah, but Chuck, not everybody knew who Bill Gates was in 1988.
No, but he was the difference maker.
Yeah, he was.
When you look at the Google guys, everyone knew who they were in 2000.
Right, but
like,
not in 1990 whenever they started, 4 or 3, right?
But
sorry, I'm missing your point. Go ahead.
What's the company that was started 3 years ago now that's huge that everyone knows the 22-year-old?
OpenAI. Right?
The guy who runs it is 40.
Oh, okay.
Like Sam Altman's a 40-year-old. His first company was like he was one of the PayPal guys or something.
No,
back
I
in the
understand
day.
your point.
Like who's the 23-year-old who dropped out of college 4 years ago that has the company that everyone knows about?
Don't know.
That's the like not the guy who's starting the company today, but who's the guy who is doing that? We don't have any names. Whereas I remember back in that, even like as much as I rip on the last vintage of tech companies because they're not really tech companies, everyone knew who Mark Zuckerberg was. Like that name was out there before the company went public. You talk about the Uber guys, Travis Kalanick, and like. People knew who they were. The Google guys back in the day, Jeff Bezos had pieces written about him. And who are the 22 and 23-year-olds that people are writing about now?
Do there have to be?
I don't know, but all I know is that
the
history of tech innovation in the U.S. for the last 50 years is littered with the 22 and 23-year-old who came up with the idea that no one else had and then made it happen.
They were all these were all good coders like Gates and Zuckerberg.
No, the Apple guys were hardware guys.
Well, Wozniak, I guess, was the...
Yeah.
Yeah. So that may be the exception that sort of proves I'm thinking about the guys who really were the subject matter experts. This is not my area, so I'm probably overlooking something simple.
I mean, I don't know.
But I don't think you have to be I think I'm missing your bigger point, which is what?
My point
fewer
is
opportunities for innovation?
No,
or
the point that I think I'm just trying to wrap my head around, and if it means anything, is the emerging technologies used to be dominated by 20-year-olds. The companies that we're talking about that people are excited about now on that front, they're not. And I find that interesting. You know, it's all of that. There was this, again, just if you look at the last 3 cycles that we've gone through, kind of that 1980s tech bubble and then 2010 cycle for, VC investment and where's the money going. It was dominated by people in their early 20s raising money and starting companies, and those being kind of the dominant companies that push things forward. And now it's kind of older tech companies that are trying to reinvent themselves but are still getting the dominant share of the action. And I don't know what to make of that other than it's not how it's been for the last 50 years. Let's take a quick break here. When we come back, it's Stack Roulette.
Text us 617-362-1385 with your comments and questions about today's show, and let us know what you think about the stories we're covering. This is the Financial Exchange Radio Network.
A recent report from LawDepot.com says that only 3 out of every 10 adults in the U.S. have taken the time to create an estate plan. Don't be a member of that group. Hi, this is Mike Armstrong from the Armstrong Advisory Group. A sound estate plan can give you control over your assets and peace of mind as you enter your retirement years. Our new guide is called Leaving a Financial Legacy, and in it, we look at estate planning from a financial perspective. It's important to have a strategy that addresses your investment portfolio and all of your holdings, including real estate. We'll also focus on other issues, such as how to manage long-term care expenses that may affect you down the road. Get your guide today by calling 800-393-4001. That number again is 800-393-4001, or you can also request the guide online at ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Are you looking to volunteer for an amazing nonprofit organization that helps our veterans? The DAV Department of Massachusetts Transportation Network needs volunteers right now. This network provides free transportation to and from any VA medical appointment for veterans of all eras. To become a volunteer driver, you do not need to be a veteran or a DAV member. You just need to have the willingness to help our veterans and have a valid driver's license. Sign up now at davma.org. That's davma.org.
There are crucial mistakes you can make during the estate planning process that may have a damaging effect on your financial strategy. Cushing & Dolan's new guide is called Detour Ahead, Estate Planning Blunders to Avoid. Get yours today and make the right decisions to protect your assets. Call 866-848-5699. That's 866-848-5699, or request it online at LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. The U.S. Virgin Islands is the perfect destination for your next vacation. Visit St. Croix, St. Thomas, or St. John and experience incredible weather, iconic history, pristine beaches, world-class cuisine, and a vibrant nightlife. Book now and you might just make it in time for the St. Croix Mango Melee on July 7th. The family-friendly event offers food demonstrations and tastings, cultural dance performances, and the ever-popular mango eating contest. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all 3 islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
The Financial Exchange streams live on YouTube. Like our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network.
The Financial Exchange has built an incredible partnership with the Disabled American Veterans Department of Massachusetts. We can't wait to take part in this year's DAV 5K, set for Saturday, November 9th at Fort Independence on Castle Island. And registration's now open. You can help our great American heroes by walking, running, or simply making a donation. Your gifts will support services such as the Veteran Advancement Program, which offers permanent and affordable housing opportunities for veterans and their dependents. Learn more at DAV5K.Boston. The DAV 5K Boston is presented by Veterans Development Corporation. Trivia question today: how many Sherlock Holmes novels did Arthur Conan Doyle write? That would be 4. Ed from Falmouth, Mass. is our winner today, taking home a Financial Exchange Show t-shirt. Congrats to Ed. And we play trivia every day here on the Financial Exchange. Tune in tomorrow for your chance to win. See complete contest rules at financialexchangeshow.com.
Mark, what do you got for me for Stack Roulette?
Chuck, you've probably heard, because it's been so widely reported, that prices are dropping for thousands of items at Target and Walmart, too.
What items?
Can I get back to you on that? Well, yesterday's article gave some examples.
No,
some of them were brand name things. But no, it's a legit question, though, and that was actually the point that I was going to make. The theme, the tone of the reporting on this stuff suggests that this will be good for inflation. And all else equal, I guess that's true, but don't be fooled by some prices falling. We don't know what the rest are doing. This is a simple point, but it's worth keeping it in mind, again, because of the spirit that some of these reports are being presented in or with. Inflation is the increase or decrease in average prices. Some prices are very flexible, like gasoline and oil and food. They change every day or throughout the day. Others are quite sticky. They only change periodically. Target's prices, even in this digital age, are pretty sticky. So this may be good for inflation, maybe not.
Because the other piece that we don't know is, okay, if people save more at Target, then do they go and spend more at almost defunct Red Lobster?
So this gets to the bigger question of the cause of inflation, which people who do this bottom-up forecasting kind of miss, which is there too much, and you hinted at this in your in an earlier segment. Is inflation the result of too much demand in the economy because monetary policy is too accommodative? I don't have the answer to that.
The answer is none of us really
know. I think
know.
the evidence seems to point in that direction, but I don't have a definitive answer now.
Taking a look at markets, now slipping slightly negative. The Dow's off 87 points. The S&P's off 6. NASDAQ down just 3. But all 3 major U.S. indices are now in the red after being slightly positive to open the day. 10-year Treasury up 0.6 of a basis point to 4.42%. So not much movement there, but all eyes are on NVIDIA today as they report earnings after the bell. I'm sure that we'll be covering that tomorrow. We're also going to be getting jobless claims tomorrow, so we'll cover those. And we get new home sales data as well. All that and more on the Financial Exchange tomorrow. We'll see you then.